pleasure to invite on stage our next speaker, Ms. Reena Chew, Senior Wealth Planning Specialist, Bank of Singapore. Reena covers UHNI clients in South Asia and the Asian market. She has been helping families for over 15 years with their cross-generational, multi-judicial succession planning and has worked in the past with Arthur Andersen and Baker and McKinsey. I'd like to welcome Reena on stage.
Hi, good afternoon. So today the topic is about, I would say, India being very focused on growth, and I wanted to share with you some ideas. What we have seen so far, or I've been covering the Indian market for the last 15 years, what we have seen so far is that in the last 5 years, there has been a lot of change. There has been humongous growth in the emerging markets. There's also a lot of wealth transfer that is happening from the generations that were born in the 50s and 60s to the generation in the 80s and 90s, and now some of them are planning for the millenniums. And what we would like to share with you today is potentially how families could set up a structure and consolidate and organize such wealth transfer efficiently from one generation to another generation. And that concept is basically setting up a single family office in Singapore. Now, what is a family office, you would ask me? A family office is very simply a headquarters set up by a family for the purpose of looking through the administration, the management of assets and investments of the family with the goal of preserving wealth management and transferring to the next generation. Okay? The organization can be as formal as setting up a multi-family office, or it could be as simple as just engaging your trusted individuals to manage these affairs. What does a family office do? It does a lot of work. Okay. The family office is usually the company that looks and manages and understands the kind of trust that the family has. They would also be helping in terms of organizing and structuring the family assets and looking through all of the family companies. They address distribution of assets to the family members, as well as the succession in terms of management and control from one generation to another generation in passing on the baton for the family businesses. Sometimes they are also involved in a lot more complicated deals, for example, in the merger and acquisition of family businesses, or even going for a listing in a stock exchange, or maybe getting private equity funding into the business. Some families are a little bit more involved in terms of philanthropy, and the family office is effectively the company that organizes such family efforts globally. Of course, one of the key roles that the family office does is to preserve and to grow the wealth. They could maybe aim to at least beat inflation, or at sometimes they're even performing better than the biggest fund houses by going through and having direct access to wealth management services like this directly, which Edelweiss obviously provides. They also look at other aspects of the needs of the family. For example, they ensure that key individuals in the family are properly insured, that in the event if there is any unforeseen circumstances, there is sufficient liquidity for the family to address their needs. They obviously work with lawyers, they work with tax accountants, they work with professionals to ensure that the family's legal tax reporting obligations continue to be complied with. And they also work with partners to create educational programs for the next generation, right? Whether it's to learn how to be more financially savvy, what's the next best investment to go into, from artificial intelligence to genetics, the family office does cover a very, very wide scope. it is also the key place where record keeping is done. They ensure that the family's balance sheets are all consolidated and kept within one company. So therefore, in the event if anything happens, the family only needs to go to a centralized company to have access to all these records and do not need to scramble to find out actually what's happening, what has been set up by the father, and so on and so forth. They look at the portfolio as a whole. They do aggregation to make sure that there's a balance of immovable assets, movable assets, sufficient liquidity, and clearly they are also the report generation to realize income, what's the capital gains, to ensure that beneficiaries in high-tax jurisdictions are able to do their reporting. Therefore, to sum it up, the benefits of setting up a family office is multifold. One of which is to ensure there is a way of building family legacy to address proper family succession, to manage risk, to actually understand what's happening around the world, especially with a changing environment that we see regulatory changes every single year. India is a very good example of that. And to centralize where all the advice is taken to ensure that every single aspect is being taken care of and that the next generation's planning is being looked at. Potentially, they can also have access to higher returns because they have the ability to go directly to private equity players, directly to institutional fund managers, and directly to the key high net worth key client space. They are also able to unify the family through common goals, values, and maintain a certain confidentiality in terms of what is the information that's been disclosed. Everything is kept in-house from that perspective. And to implement a certain governance structure in terms of how family affairs are actually being managed. Now, why would one choose Singapore to be the jurisdiction to set up such a family office? Traditionally, families that we work with have looked at multi-jurisdiction to set up such a company, right? One of the most popular one is obviously London. They'll look at New York being a very big financial hub. They'll look at Geneva, potentially Luxembourg, Dubai, Hong Kong. The list goes on. And where does Singapore fit in nicely in these giants? Why would someone choose to set up a family office in Singapore compared to anywhere else in the world? And the reason being is very, very simple. Singapore is the only jurisdiction that has got very clear rules as well as taxation regime in terms of treatment of family offices compared to the rest of the world. So if we look at some of the benefits of setting up a company in Singapore, it's as follows. It is a preferred gateway to the rest of Southeast Asia and potentially to China. It's got clear and transparent legal and regulatory framework. It is politically stable, which is very important these days. It is a very attractive hub whereby it is not the most vibrant city in the world, but it is one of the safest cities in the world, whereby families don't mind either transferring staff to stay in Singapore, to work in Singapore, or even themselves to uproot their families and to move to Singapore. There is also tax exemption, which I'll go through in the next few slides. It has got very good corporate trust laws, IP laws, which tend to facilitate the other aspects of what the family would like to focus on. For example, their own businesses, setting up their global business headquarters in Singapore as well. And it's got a very strong tradition. Now, let's talk about tax. Why is Singapore attractive and competitive from a tax perspective? Okay. Singapore, for one, it is not in a negative light. It is not really in any black or gray list because of the fact that it is not a tax-free jurisdiction. It is what we call a tax-neutral jurisdiction. Okay? If you set up a Singapore company, the general corporate tax rate for a Singapore company is 17%, which is about half of what it is here. But if you go for the tax exemption, you traditionally will be taxed at 17%. That 17% goes away. And therefore, clients are looking at this being a very sustainable structure, setting up such a structure in Singapore whereby I've got clear clarity of laws and I can get tax exemption. Not only that, I could potentially shift my family to Singapore and become an NRI. So this is a very simple setup where we have seen lots of families feel that this is completely workable. So what do I have to do? First of all, I would have an asset holding entity. Most families will have an asset holding entity. The question is, where is this asset holding company to be set up? Traditionally, I may choose a jurisdiction whereby it can be easily set up with a few $100s, no accounting obligation, no reporting, nobody knows that I am the owner of this company. Now, rules have changed. Transparency laws are now in place. It makes it difficult to just set up an asset holding company and not have any records. So therefore, I need to give it a little bit of thought as to where should I set this up, okay? If I choose to set up this asset holding company in Singapore, well, the good thing is I can make use of the double tax treaty network that Singapore has with over 90 countries, which is great. Means that I could save on withholding tax. I can also use the Singapore company to hold my bank accounts and potentially invest in other companies that I have interest in around the world. And considering that the investor will be a Singapore company, most people don't really have an issue in having a Singapore company as the asset holding company. So therefore, that is the purple box, my fund entity, or what I call my asset holding entity. Now, in addition to this asset holding entity, as well as a fund entity, I need to set up one more company, which is in the pink box or peach color. It is what I call my family office, right? One of the activities that a family office do is fund management. So what I have is an arrangement between the family office and the asset holding company, whereby I am delegating all investment management activities to the family office. And in return, obviously, I charge a fee, which have to be at arm's length. But by doing this, I can actually apply to the Singapore government to ask for tax exemption at the purple box. Which means if I've got 30 million worth of assets, and if every year I earn a 10% return, that 10% return, even though it is controlled and managed in Singapore, is completely tax-free in Singapore. Now you're asked, why would the Singapore government do that? Why would they give such a beneficial tax scheme? The answer is very simple. They want to attract assets to be booked in Singapore. They feel that if families set up a fund management company in Singapore, in time they will hire people. Plus, you would have expenditure in Singapore, and the multiplier effect of the expenditure is what they are looking at. Now, once I've set up a fund management office in Singapore, there's something else I can do with it. I can use this company to sponsor employment paths. I can get my family members to shift to Singapore, right? We have realized in the last 5 years when we speak to families, a lot of the wealth is generated from the brick and mortar business. They are in manufacturing, they are in textiles, they are in jewelry business, so on and so forth. The list goes on. But when we speak to the millennials, very few of them are actually interested in the brick and mortar business. A lot of them would like to be in more fancier jobs, and one of which is to actually work for the family office. So by having a family office, I can use this company to sponsor the employment path for the next generation, for them to shift to Singapore, to work in Singapore, or the family can choose to shift their trusted individuals to Singapore to control and manage this family office. So therefore, I shift control from onshore to offshore in Singapore. And once you meet 183 days in Singapore, you would be viewed as a tax resident in Singapore, therefore changing the tax residency status of an individual, which is very powerful. And the criteria to apply for an employment pass is very simple. The applicant has to be a graduate, and the applicant should be earning a reasonable salary. The lowest is actually 3,600 Sing dollars a month, but we usually recommend to pay the guy a little bit more at 8,000 Sing dollars per month to get the employment pass. The employment pass can be for a year, 2 years, 3 years, and it will be renewable based on the activity of the family office. So this is one option in which one could change residency. There is another option, which is actually to work with another government body called the Economic Development Board of Singapore, which we work very closely with. And this body will be able to sponsor permanent residence for applicants. And under the family office regime, they are able to sponsor the applicant's PR together with the applicant's family members, meaning spouse and children under the age of 18 who are not married. The only caveat is that in Singapore, if a second generation applies for permanent residency and if they are a male individual, there is a military service requirement in Singapore. So some families will say, I'll apply for everybody else in my family except the boys, which is completely possible. And the criteria to get a permanent residency in Singapore through the family office is basically I need to show that the family's net worth around the world is at least 400 million Sing. So it can be form of property, business valuations, financial assets, so on and so forth. There is also a minimum requirement to park substantial size of assets in Singapore. And that minimum requirement is 200 million Sing of assets under management, which can be a leverage amount, depending on how they want to go about it. And therefore, and the requirement to get a renewal of the permanent residence, because it's for 5 years, is actually a hiring criteria, which is they want to ensure that at year 3, you're hiring at least 5 employees, and in year 5, you're hiring 10 employees. And some clients will ask me, well, it's a family office. Do I really need to hire so many people? The answer is no. But the fact of the matter is that if you use the family office to invest in private equity in Singapore, and due to that investment, you actually increase the employment in Singapore, that could also potentially count towards this 5 and 10 individuals. Okay. Now, some clients say, well, you know what? I'm not liquidating my business. I'm not sitting in a pool of cash. That could be potentially my net worth, but I don't necessarily have a liquidity of 200 million that I just want to park in liquid assets. But I do have a running business, and I'm happy to set up a global headquarters in Singapore to run this running business. And I'm interested to apply for the permanent residency in Singapore. Now, this is the other option that they can consider, which is called the investment option. The investment option basically is to encourage certain industries to be set up in Singapore. So the traditional manufacturing, trading, business is something that Singapore is always welcoming. There is obviously the IT, the intellectual property, the renewable energy, anything to do with the high-tech space is also an industry that Singapore is trying to promote. Therefore, if an individual decides to set up a headquarters in Singapore, put in a capital of 2.5 million to invest in that business, to run this business, and what they need to do is just to show that they have all the while been running a sustainable business that earns at least a minimum turnover of 50 million for the last 3 years anywhere in the world. They would then be able to go for this particular scheme. Okay. Again, there is a hiring criteria. And the hiring criteria is that they would have to hire 5 individuals by year 3 and 10 individuals by year 5. Let me share with you some of the very simple cases that we've done so far for Indian families. This is a very simple family trust setup. They use a licensed trustee in Singapore to act as a trustee of their Singapore trust. They have various family members as beneficiaries of the trust, and the patriarch is basically the settler of the trust. Under the trust, there is an asset holding company. And in this particular case, the asset holding company is actually a Singapore company. Okay. When they first started out, they weren't very sure whether they wanted to set up their own family office. So therefore, what they did was that they engaged the services of a licensed fund manager in Singapore, and yet they are still able to apply for a tax exemption at the purple box. And for a lot of families, this works for them as a starting stone, right? They have a professional fund manager to manage their funds. They have clear tax exemption in Singapore. It's a Singapore company under the Singapore Trust. Everything is good. As they get familiar with Singapore as a jurisdiction, they are more confident that they want to set up their own family office. And that's where the peach color box comes in. And they then put in their own family members and their own individuals to be employees of this single family office. And things run as per what it used to be. The other case study that I'd like to share with you is a little bit more complex. And this marries a little bit in terms of the business side of things as well as the financial side of things. And this takes time to build. It is not something whereby a family can do easily overnight. And we're happy to walk with the family through the process to create such a structure. First of all, usually what happens is that someone has to move out. So we have a non-resident individual. Now the non-resident individual will then start building on the financial assets part of the family. So therefore, your single family office comes in, your asset holding company comes in, which is the pink and the purple box. Okay. As time grows, when the pot grows bigger, and they are able to use the funds to buy over their own businesses that they currently have, but they want to change the ownership. And they need to show that it's an arm's length transaction. So slowly, any new acquisitions, any new business developments, they park under this particular structure, and whatever is existing, they try to buy over it slowly over time. Okay? Therefore, you have the Singapore company acting as a holding company for all its underlying business to make use of the double tax treaty. Now, as things get bigger, the family feels that, you know what, I would like to be my own trustees. I do not want to engage a licensed trustees to do this business for me. I would like to control and manage it myself. They can do that. They can set up a private trust company, which is a lot more of a formal arrangement, instead of having individuals as trustees of their trust. And again, at the private trust company level, they can choose to actually hire their own trusted individuals as directors of the private trust company as well. The only thing is that to make banking a lot easier, they will definitely engage the services of a licensed trustees to address KYC and AML requirements when trying to open bank accounts. And therefore, this is what I would call the most Rolls Royce of all the structures in terms of from a family planning perspective. It allows the family to control and manage their assets. It puts in a formula to decide as to how this management control is being passed on. It addresses distribution of the assets. Things are kept confidential because no longer I have to go through any will, probate, so on and so forth. That's not necessary. All the succession is addressed within the structure. And I build up a complete system for this to be running for the foreseeable years to come. And a trust can have no perpetuity period. So therefore, I can cross as many generations as I want it to be. Okay. So with that, I'd like to end my presentation. If there's any questions, I'll be happy to take the questions either offline or when I meet you around the area. Thank you very much.